Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 8th, 2025, we're putting the spotlight on the NZDUSD currency pair. Let's start by looking at the broader economic landscape and recent news impacting this pair. A key theme driving currency markets right now is the expectation of further interest rate cuts by the Federal Reserve, which is generally weakening the US dollar. Conversely, the New Zealand dollar appears to be gaining strength, fueled by increased risk appetite and recent reports of strong export figures from China, a major trading partner for New Zealand. The current rate for NZDUSD is around 0.59657, showing a slight increase of 0.03% in the past 24 hours. Looking at the USD to NZD conversion, the US dollar has seen a decline of over 1.29% against the NZD in the past week, indicating a sustained move against the greenback. Now, let's correlate this news with the daily chart. As we zoom in on the daily candles from late July into August 2025, we can clearly see this narrative playing out. A notable point from recent news suggested that NZDUSD had settled with a sharp decline after breaking a critical support level at 0.5880. However, looking at the chart, this supposed breakdown around July 30th to 31st was very short-lived, with the price quickly reversing above 0.5880 and initiating a strong upward trend. This level, therefore, has acted as robust support, marking a significant reversal point. The strong bullish candles since August 1st, from lows near 0.5880 up to the current levels approaching 0.5970, demonstrate a clear buying interest, likely fueled by the broader USD weakness and positive NZD sentiment. Shifting our focus to the 1-hour chart, we gain a more granular view of the recent price action. You can observe the consistent upward momentum since August 5th, with a series of higher highs and higher lows. This reinforces the short-term bullish trend that began after the bounce from the 0.5880 daily support. Intraday support has formed around 0.5920 to 0.5930, where the price found buyers on dips. Interestingly, another news source suggested NZDUSD would be unlikely to reach 0.5960. Yet, as we speak, the price is currently trading above this level, around 0.5965, demonstrating the market's strong bullish conviction and the rapid invalidation of some analyst forecasts. The sustained volume during these uptrends also confirms the strength behind this move. Let's drill down to the 15-minute chart to identify short-term trading opportunities and recent intraday dynamics. Within the last 24 hours, the price has generally maintained its bullish trajectory, albeit with some minor pullbacks. The level around 0.5930 to 0.5940 has acted as a consistent intraday support zone. Momentum has been strong, with bulls stepping in on each minor dip. For short-term traders, watching these minor support levels for entries with tight stop-losses beneath them would have been a viable strategy. The continuous push towards 0.5970, especially the strong candle into the August 7th close, suggests a strong close to the trading day. Any reversals from this point would likely require a break below 0.5950 on this time frame, followed by confirmation on the hourly chart. Stepping back to the one-day chart, the long-term outlook appears to be shifting from consolidation to a potential bullish breakout. The 52-week range shows extremes at 0.5485 and 0.638. The recent bounce from near 0.5880 is crucial. This level now acts as a significant short-term support, potentially forming a new base for further upside. For a short-term bullish outlook, a sustained break and hold above the 0.5970 to 0.6000 psychological level would be a strong signal. If NZDUSD can conquer this resistance, the next significant targets would be around 0.6050 and then potentially 0.6100, which have acted as resistance in previous months. A bearish reversal would be confirmed if the price decisively breaks below the 0.5920 to 0.5930 intraday support and subsequently fails to hold above the 0.5880 daily support, indicating a return to downward pressure. However, given the current news of USD weakness and NZD strength, the probability of a continued bullish trend in the short to medium term is moderately high, perhaps around 65 to 70%, provided global risk sentiment remains positive. Look for upcoming economic data from both New Zealand and the US, particularly inflation reports and central bank statements, as these could provide fresh catalysts or challenges to the current trend. In recap, the critical support levels to watch are 0.5880 in the long term and 0.5920 to 0.5930 for the short term. Key resistance levels are currently around 0.5970 to 0.6000, followed by 0.6050 and 0.6100. A convincing close above 0.6000 would strongly reinforce a bullish prediction, making a move to 0.6050 and beyond highly likely. Around 70 to 75% probability under current market conditions. Conversely, a breakdown below 0.5880 would increase the likelihood of a retest of lower levels, possibly towards the 0.5800 mark, with a 60% probability if that support fails. Always pay attention to volume, as strong moves on high volume tend to be more reliable. Remember, trading involves risk, and this analysis is for informational purposes only. Tune in next time to explain the charts for more in-depth market breakdowns.